Good morning. We're here at SuperReturn's Emerging Market 2015 and I'm joined by Jos van Gisbergen, who's Senior Portfolio Manager at Syntrus Achmea. Jos, you were speaking this morning in the debate around emerging markets, were they a flash in the pan, and you took a bearish attitude. Could you give us the salient points from your debate?
Well, the salient point from the debate is a very clear one. What we always do in the emerging markets, we compare with what we have seen, the developments in the venture capital world. And if you see in the venture capital world, it comes with cycles. Long term, it doesn't add value. Long term, there is nothing to gain for investors. But on the peaks, the hypes that are happening, you wouldn't like to miss it. And that's exactly what you see here in the emerging markets with the hypes. And we are at the moment in again, a high period where exits are good. We had one in the prior periods. Money flow is driving this whole event, and the fundamentals, the real fundamentals, are lagging in the emerging markets to make long-term, good, sustainable companies and to get at a scalable business.
Okay, so is this more of a case of emerging markets not yet had their time in the spotlight? Is a case of not yet rather than no?
It depends on. Some had it, some will get it again. Like again, comparable with the VC, we had the internet bubble. People benefited from. We laid the floor for a lot of invention afterwards. The same you will see in the emerging markets. The fundamentals have to be built. The fundamentals have to be laid down, and that takes time. And that a lot of investors are putting money in it for the short-term returns instead of having that, what I always call 20 years plus forward-looking. So if you have that 20 plus years forward-looking, fine. Then build and create the fundamentals, and thereafter you will gain.
So it very much depends on your investment time horizon. What would you say are the lessons to be learned, or things that could be done differently as we look at other emerging markets or even frontier markets?
I think what you will see, what lessons are learned, again, what we have seen again with the internet hypes and the venture world, it is a non-scalable business in the early days. Don't throw your money in like crazy to make short-term gains. Be prepared to build and create the fundamentals. It takes time, and building the fundamentals, it's not only money that creates the fundamentals, it's the government that has to put in the right legal fiscal system. It is the environment that needs to be in favor of shareholder value, not like we have seen in Asia, short-term pre-IPOs make a quick flip and go on, but create long-term sustainable companies. And again, sustainable means respect also for the social responsible environment. That means ESG is one of the components included. If you miss those elements, it takes long, and people have to be patient. And that, I think, is what investors should learn, is patient. Don't scale it up too much. Put a little bit your toe in the water and wait till it all happens. Be at the forefront to see the developments, but yes, don't go for the quick flips and the quick money.
So long-term patience, ESG and sustainability are key topics to invest successfully in emerging markets.
That is, and that's why you see in the emerging markets, 10, 15 years ago we discussed China as an emerging market. Look where they are standing today. There will be more countries that follow. One will be better advanced than others, like what you have seen in the internet world and in the whole technology developments. Same over here. Some countries will do well, others it will take even not 20 but maybe 50 years to reach that goal.
Good. Jos, thank you very much.